What's the background to the energy sector in China? What are China's energy needs?
Well, as we all acknowledge and understand that China is growing exponentially year over year today, and will continue to do so for decades to come. Energy needs in China are across the entire mix available to the Chinese sector: coal, gas, oil, solar, nuclear. But within that entire blend, gas is clearly the exponentially growing sector or component within the energy mix. Till date, China is only consuming 4% within the energy mix for gas, and it's predominantly a coal-based energy consumer. Going forward, the country's policies are driven from increasing that 4% up to closer to 25 to 30%, which is more in line with developed countries like the United States and the UK.
So where does Green Dragon gas fit within China's energy mix?
Green Dragon gas is recognized and expected by the central government to be a key provider for domestic gas production to feed the inner provinces within China itself.
And significantly, the coal bed methane market in which you operate is deregulated in China.
It's deregulated, and the only component within energy that is deregulated as an incentive to provide companies like Green Dragon a drive to deploy more capital and get that gas production online a lot faster.
What's your take on the questions of price and profitability and margins that hang over this part of the energy sector?
Very simply, gas is sold to a consumer, and the closer your consumer is to where your asset is located, the higher the margins are. We're a domestic Chinese gas producer with local Chinese labor, and we're getting global prices on a delivered basis in China, hence the highest profitability that's possible.
Clearly, the 21st century is going to be about the Chinese growth story. We're here at the London Stock Exchange where you're listed. If investors want to play in the Chinese energy market, what's the case for investing in Green Dragon gas?
Well, you would invest in Green Dragon gas because we're the only pure energy company listed on the London Stock Exchange focused in China and exclusively in China. We're not a company that does many different things, but the thing we do right, and I think do the best, is gas and domestic gas production in China. Large gas reserves, 25 trillion cubic feet, located at the right location where the consumer is, domestic production with global commodity prices being provided over to us.
And to set those figures into context, 25 trillion cubic feet is about enough to power the entire United States for about a year.
It sure is, and only 10% of that, which is currently proven and audited by independent valuers, value it at $9.35 billion US.
So where next for Green Dragon gas? Where are you taking the company?
Simply do more of the same. We've gone through a 10-year cycle of development. We've got proven technology, proven gas reserves, and a large consumer base eagerly awaiting our gas to fuel the energy demands that they have. So our simple plan going forward is produce the gas that we know how to produce today.